DXY battles 104.45 resistance ahead of the holiday weekend. The US dollar index, DXY, is fighting with 104.45 resistance today, a key level that will likely determine what we see from the dollar next week. In today's video, I discuss what's required from DXY bulls to open up levels like 105.00 and 106.00, and whether we're likely to get a sweep of Tuesday's wick near 104.00. The DXY is battling the 104.45 resistance today after piercing the level intraday. However, the daily close is what will determine whether 104.45 remains intact as resistance or flips to support. Given this week's illiquid conditions, I wouldn't be surprised to see the DXY remain below 104.45 and eventually sweep Tuesday's lower wick. We often see long wicks get filled, especially during consolidation periods. The fiscal and financial risks of a high debt, slow growth world. Higher long-term real interest rates, lower growth, and higher debt will put pressure on medium-term fiscal trends and financial stability. Inflation-adjusted interest rates are well above post-global financial crisis lows, while medium-term growth remains weak. Persistently higher interest rates raise the cost of servicing debt, adding to fiscal pressures and posing risks to financial stability. Decisive and credible fiscal action that gradually brings global debt levels to more sustainable levels can help mitigate these dynamics. Cuts are always 4 months away. Waller shows how central bank guidance is contingent on future data. And future data is hard to predict, rendering the central bank guidance mostly useless. The lunar Maria are large, dark, basaltic plains on Earth's moon formed by lava flowing into ancient impact basins. They were dubbed Maria, Latin for seas, by early astronomers who mistook them for actual seas. They are less reflective than the highlands as a result of their iron-rich composition, and hence appear dark to the naked eye. Key events in developed markets next week. Inflation and labor market data will be in the spotlight in the Eurozone next week. We expect services inflation to be impacted by the Easter effect and unemployment to remain unchanged. The U.S. jobs report will also be in focus, with payrolls expected to rise by just under 200,000. In the UK, the BOE CFO survey will likely show further inflation progress. In this article, U.S. payrolls expected to rise by just under 200,000. Eurozone, services inflation expected to come in higher in March. UK, Bank of England CFO survey to show further inflation progress. Statement from National Economic Advisor Lael Brainard on fourth quarter 2023 GDP and March consumer sentiment. Today's reports show continued progress delivering on President Biden's agenda to lower costs and grow the economy from the middle out and the bottom up. Consumer sentiment has turned a corner and is up nearly 30% over the last 4 months, the fastest increase in 30 years. The turnaround in consumer sentiment comes as consumers expect lower inflation and report feeling good about their personal finances. In the second half of 2023, GDP grew faster than at any point from 2015 through the pandemic.
Thank you.